Tick-tock, tick-tock. The clock winds down in Europe. No one knows when the clock will stop, but we know by hearing its chimes that it needs to be wound. There is nothing that will be done to save the euro currency as we know it. Greece will exit. Depending upon how successful the transition is, other European nations most likely will look for an exit. These expectations have killed investors of gold. The element is down 11% since its high in early March, and one of our favorite miners, Newmont Mining, is down a whopping 44%. What does this mean? The belief is that when the euro falls, investors will run to the US dollar. This means that the dollar will appreciate in value to the euro. Some speculate that it could go to parity, which would mean it could drop 21%. If so, going on a European vacation ought to be more affordable. Of course, if the dollar rises in value to the euro, the U.S. stock market ought to go down severely. By bailing out of gold, speculators hope to be ahead of the exit trade. While I agree that usually gold and the dollar move in opposite directions, which means if the dollar falls, the price of gold rises, this is not always the case. In the past, the dollar and gold moved together in 1982 and 2009. In both circumstances, a recession existed in many countries, including the U.S., and there were sentiments that central banks around the world were losing credibility. While the U.S. is not officially in a recession, the rest of the world has slowed considerably. To think the U.S. is immune is foolhardy. The euro's decline is all about the loss of credibility of central banks, which includes our own, since we've tried to bail out Europe already. Therefore, contrary to the speculators, when Europe implodes, I believe gold will advance with the dollar. Eventually, our government will announce an increase to the deficit. The dollar ought to go down then, and the gold ought to continue advancing. Meanwhile, I believe it's prudent to analyze one's portfolio, take some profits where necessary. In the approaching strange deflationary period, cash will be king, followed by good bonds, select stocks, and consider buying gold at these cheap prices. Before the clock winds down completely, give us a call at Armada Advisors where we are charting a better course.